Hello, everybody. I thought before we get things going, before we get really into it, it might be great for you to all know what everybody's focus is, what stage they're investing in, because it's wonderful we have sort of a real diversity of stages and interests represented here. And maybe just kick it off with Jeannette, who invests at the earliest stage. So.
Exactly, happy to. So I'm Jeannette. I co-founded a fund called La Famiglia, which is based in Berlin, investing pan-European into seed stage companies, mainly in B2B technologies that either enable or disrupt large sector industries. I'm going to talk a little bit more to that later. But I think we're very excited about the concept of connecting these early stage companies to established industry players in the ecosystem and thereby help them flourish and build up to full potential.
I'm an investor with Atomico. Atomico is a Series A and beyond fund, so one stage after La Famiglia. We're pan-European and invest in tech across consumer enterprise and deep tech.
Hi, I'm Carolina. I work at the Softbank Vision Fund. We invest the growth stage globally. So typically when a company has developed product market fit, has gotten to a certain stage within a market or within a product and is really ready to scale. And I'm based in London.
Great. So we have a really good cross-section of the sort of stages of investing. And before we get into the topic of the panel, since it is 2020 and since we just finished a decade, I'm curious, what's sort of the most important lesson you learned in the last decade of investing? Anybody wants to?
I can start. So I was reflecting on this question, and there's so many, and I was trying to think about an investing lesson that kind of encapsulated many. And I think it is that how powerful technology is in its ability to tectonically shift things over a period of time. If I think back to a little over 10 years ago, I was an associate at a large private equity firm, thinking about my base case over 5 years and trying to guess what, in 5 years from now a model would look like. And, I was at a firm that's very traditional and had sector teams, and certainly online was a little line in my model that wasn't, super significant. And this was the time when Apple had its one iPhone hit. People wondered whether it would stick, whether it'd be something else. Facebook was coming up, and now these are some of the largest technology companies. So I think to summarize, I think in venture especially, the ability to really think long term and to know that you can't quite know what's going to happen in 10 years from now, but that it's going to be really powerful.
I think for us, one of the main lessons has been, and for Europe in particular, is that great companies can come from anywhere really, whether it's outside of traditional geographical hub or outside of traditional sectors or outside of the typical founder profile, if there is ever one. And I guess, the best example is the company that comes from my home country, UiPath, started up by a founder with 20 years of industry experience, spun out of a consulting business. So kind of none of these elements was traditional. And there's a lot of examples like that. And I think that's going to even get stronger.
Yeah, I think it's interesting. I think I would echo that. I think it's interesting to see that from our perspective, especially looking at traditional industries, we see a lot of non-obvious founders. He may be in the 40s and 50s and don't look like the 25-year-old whiz kid, but who really come with a very, specific set of process and industry expertise. And then they pair that with a rising degree of commoditization on the technology side, and that just creates a very strong, actually breakout potential. Now I think we're at the topic. I think secondly, related to that, another lesson was that sometimes timing in technology development is very different from what the market anticipates. I think looking at machine learning for the past decade, it has been very much overhyped to a large degree. Looking at, thinking that we'll now all be driving autonomous in cities. I think that has now been relativized to a large degree, but I think we have laid the foundation for something that will be a very, very exciting 2020 decade. It's going to be, exactly at the stage where it's ready to deploy for many, many sectors to come.
Well, that's a good segue, maybe. So, anything in particular you're looking forward to in the 2020s, or you're sort of worried about as we're kicking off the 2020s?
I think we're in my view, a lot of the lower hanging fruits of the industries have been picked, and it's a great time for tech to start penetrating the older industries that traditionally haven't been touched by it, and also to generate more fundamental innovation, whether it's by intersecting it with science or by really going after harder problems, bigger problems. And I think that creates, a great opportunity. At the same time, it creates the risk of things taking longer than they used to be, hype not actually delivering on its promise. And I think the worry I would have there is, as we are tackling bigger issues, we spoke about climate earlier, or health, or if there is hype and then there is disappointment, there's a risk we drop them exactly when it's most critical to keep going. And I think the other worry I have is our tech, the bigger it is, the more vulnerable it is at the same time, whether it's because it's accumulated technical debt, or whether it's because our data is more shared, or we're starting using AI for other purposes like deep fakes, and that can also reveal the other side of the coin increasingly. So that would be my.
I think if I just go back to what are the things to look forward to in 2020, the other side of the coin, but I totally agree on the concerns, is I think we're in the beginning of disruption in a lot of these really massive sectors, right? And, to think 10 years from now and think that, cancer could be cured and we could be somewhere totally different with exploring things like space and, everyone gasp could be vegan, right? And, these are things that today we might not be able to think about, but I think things like AI and machine learning, which did have a period of winter after there was hype and then it didn't pan out. I think, with deep learning and so on, these are really going to transform sectors. And so I think there's a lot to be excited about.
Are there specific sectors you, Jeannette, are focused on, for example, where you think there's been under penetration to date?
Yeah, for sure. I mean, maybe just quickly going to one worry, which I think is something that concerns a lot of people in this room, and I think also us as investors, is that I think what we've seen for the past years is with, the whole hype around companies like Uber or Lyft and everything that was kind of happening, you saw a lot more private and institutional capital flowing into the market, and I think it has always gone through these waves, right? And my worry is that with, the current market environment contracting maybe a little bit on the macros, that, that funding will go away again, right? And I think this is just a trend that in general has been visible for many, previous periods. And I think that would be a shame because, as you said, Carolina, we're just now at the moment where technology is really pulled horizontal across every sector, and it's just beginning to enable and really drive a lot of industries forward, and they need funding, right? Just put out there as a worry. I think going forward, as what we are sourcing for, and we're really curious by, I think we, as a fund especially, are always very excited about people who basically come from, for example, deep science backgrounds, which we have great, potential in Europe, especially with all our, technical universities. Sometimes people, who work in very weird departments. Looking at a company like Animal Dynamics out of Oxford, where the founders were actually active in zoology, right? And then they kind of designed these very cool drones where they just took learning from that sector and just brought it to technology. So I think that happens across a wide range of very traditional industries, very sectors that are hard to penetrate, and ideas that cannot be generated if people are just, unilaterally focused on just technology or just one thing. So I think at La Famiglia, we are very excited about the future of work, for example, as one theme. Where does automation really drive efficiency? Where does it reap productivity? Where does it really kind of free up time for humans? And what does this time actually really become for people to think about ethical problems, which I think come with technology as well. So I think future of work is something that we're very excited about.
So now let's get to Breakout. companies. And I like the word breakout because the other word that lots of people use is unicorn, which I think was a terrible coinage and should hopefully not be mentioned on this panel or ever again. Breakout companies are important because they're important for an ecosystem to have really big successes. I think Skype, for example, did a huge amount to help get the Nordic ecosystem going. They're obviously also very important for fund returns. And so how do you think about, what do you think about at your stage? How do you think about what qualifies as a breakout company? Is it a very disruptive technology? Is it already the metrics? What do you look at to go, oh, this really could be the thing?
I think it's mainly vision. I think it's different for everyone, right? I think for us it's really vision with regards to how much mission-driven potential is in that founder to kind of really try the hard problems, right? And not settle for less and be relentless about finding solutions and just probing it to make it a reality.
What's a great example of a vision that has really grabbed you recently?
Lilium, for example, right? Like, I think Lilium is a Munich-based company. Again, like who would have thought that you would have an amazing electrical vertical takeoff and landing jet coming out of Munich, right? And being able to get to that scale. I mean, it's Atomico funded thanks to someone like Nicholas, who has seen it happen at Skype, who is willing to kind of fund that company, which wouldn't be in the market for a very long time, which is something that Europe has not been very prone to doing in the past, right? I think they were always kind of looking to the bottom of the balance sheet, thinking, when is this going to be, making money, and how are we going to, look at it from the next round perspective? That has changed, right? So I think that is a great example of a very vision-driven founder who just relentlessly pushes towards a completely new way of imagining, transportation. And I think the second aspect of a breakout company that we would really look for is a potential to create like 100 to 1,000x outcome. So I think that would typically classify as a breakout. So I think looking at companies that are in large enough markets would have bold enough founders to really go after that with the associated risk, right? It just comes with like the very large part of risk as well, is very exciting.
Now you write very large checks by comparison. What kind of criteria do you use, and might be an example of that also?
Yeah, of course. So I'll use an example of a company that I actually followed since my time at Atomico, or invested in it, and we've now invested in it as well as Softbank, and it's a company born out of Brazil, and it's a B2B benefits company for gyms. So on the one side, they sign up fitness activity providers, and then they sell that to employers as a benefit to employees. And it may not sound like something that's game-changing, and people might think, oh, this small company coming out of Brazil, but at a certain point, when you meet the founders and you understand the vision, and I think the outcome of validating that is looking at the metrics and finding out that what this company is creating for people, access for people, 70% of people who use this benefit never had access to gym benefit before. So truly growing access for people to move and be active, which is clearly very important. And there's a strong mission there. And that company's now gone from Brazil to many places in LATAM, to Europe and the US. And I think that's when Softbank starts getting very interested, because there's a playbook that has happened in Brazil. It's expanded, it's gained dominance, and now you can use capital to just expand that playbook in many other places. And it's a similar story, right, to Ubers and Didis and whatnot. So I think that a breakout company for us is a little bit more data, because there's that proven playbook, but I think there's always, it begins, starts, and ends with a powerful mission, a vision, a great team, and a product and/or service that is powerful.
What about at your stage, Irina?
I think we're kind of, because at Series A we're closer to what Jeannette was saying. It starts with the founder, and I personally look into deep tech, so for me it often starts with a founding team where you have the technical founder and then the team around him. And what I look for is obviously the vision, the mission, the kind of hustle to actually take on really a hard road ahead, because it is going to be hard. A bit of creativity to not just say it's hard and this is how things have always been done, but actually try to cut corners and try to think about ways to hacking your ways into older industries. And also, in more like deep tech, deep science, you do have increasingly interdisciplinary teams, and actually it's easier said than done building that, where you have to keep the constant balance between your tech and your biologists and your commercial people, and there's different ages and there's different alphabets. They even come from using different project management tools in different industries. I mean, there's a lot of practicalities of making those people work together. And so teams that have managed to do that well and that have a dialogue where there's equal voice around the table and that can respect differences and function, I need to see that when I invest in kind of deep tech, because without that, it's just a research project.
Now, especially in the US, there's more and more venture dollars, and there's been sort of this situation where if a company is a breakout company, everybody wants to pile in, valuations go sky high, and as a result, sort of lots of people are going earlier and earlier. I'm curious whether you think those are the only two options, just either hold your nose and pay up, or just go earlier, or is there something else that investors can do to be competitive, I guess, at the end of the day, to sort of not just find these deals, but also be able to close on them in some other fashion other than those two, or maybe those are the two options?
I think what Softbank does, as an example, is take a really long-term view. To the extent that we actually have a public markets team sitting in the office so that you can actually hold and manage a public position in a company that eventually IPOs. And I think tying back to the first point of you have to have a really long-term view on some of these companies. You have to have a long-term view, especially in something like deep tech, which is one of the very exciting sectors. And I think one of the things that you realize after some time is to pass on valuation alone on something is a little bit lazy, right? And so, you can make mistakes on teams, you can make mistakes on execution, but you can never imagine if something's truly transforming a sector, something like Skype, or Airbnb, things that have never existed before, then it's hard for you to say that you're capped out on the size of the outcome. And so I think the approach that Softbank has taken with the pool of capital that it has is to take a really long-term view.
I think Europe's slightly different in some ways. I think there's still technologies that are underfunded, and I think especially in deep tech, at later stage, I wish there were more investors. The other thing we do is we tend to be quite thesis-driven, so we go in with a prepared mind, and that helps you differentiate yourself, but also it helps you move faster through a diligence process, which have become, where the timelines have become compressed. But I think in these fields that are harder to understand, there's less competition than in a classical enterprise or a classical consumer business, where a lot of the investors have expertise. So one way is to try and look where others aren't.
But I think what you were saying is basically that at the seed stage, if it was so clear that every company was going to be a breakout company, then, it would be so easy. It would be so easy, we could all just throw money at it and it would work. So I think since that is not the case, so I think from our seed stage perspective, prices have gone up a lot for the obvious stuff. So like, Series A, like serial entrepreneurs, people that have, built big outcomes before, or like, so there's a couple of things that are just leading indicators for like, competitive term sheets. However, I think there's still a lot of breakout companies that are very undiscovered at the seed stage, right? It's just because they're non-obvious, because the problem seems ridiculous, because the market doesn't yet exist, right? They're creating a new market. So I think a lot of that comes to the fact that some of them just seem, look at Celonis. Celonis took forever to actually, come out of stealth and like really evolve into the shiny company that it is now. So I think that is one. And then secondly, going to your point, Carolina, I think it's, what has been a bit worrisome is, at least from my understanding, is how a lot of funding has gone or has been thrown after just sheer, revenue or GMV growth at all cost. And that has just created a very unhealthy kind of acceleration pace for these companies, which I think were unsustainable both from a company building perspective, because no matter how fast you hire, you still have to hire good people to build these products. So And sometimes it just led to unhealthy outcomes with regards to, alluding to your, partner's post on paid acquisition, the death of paid marketing, right? I think they've just exhausted all these channels, just throwing too much money into it. I do think that has to recalibrate to some degree.
So earlier there was the idea of maybe a replicable playbook that you can invest in. There's also the idea that maybe some of the existing playbooks have been exhausted. Is that also an opportunity? I think, other than sector, are there new playbooks to be created? And how does that relate? How does that relate to how you think about the type of founders and founder profiles that you're looking for?
I think what founders need to do is just listen to their customers, right? Like, just be product driven. Like, make a product that people really want and make it so great that people cannot but use it, right? And then you don't need to put so much money into marketing because there's like a strong virality built into it naturally. So I think looking for founders that are able to listen as well as execute, and that have like the right degree of stubbornness as well as willingness to adjust, and then kind of they put that into their product and company building framework is something that we very much try to test for at the seed stage already.
I think we are creating new playbooks, actually. So one of the companies I invested in this year, Helix, is part of this new generation of companies that do computational drug discovery. So the research part is done through a computational method. And there's 20 companies, 20, 30 that are kind of at a certain scale now. They all have to invent a new way of doing things because they are a new type of company. They are what we believe is the next pharma, but it's not going to look like the old pharma. And so the way they find their business model, the way they build their teams, the way they actually think about fundraising and aligning the technical and scientific milestones and the commercial milestones with the fundraising windows, which is not that trivial all the time because we're talking 18 to 24 months for things that take longer to prove. And how do you actually think about those? I think that's a whole new playbook that is being written. And that's going to happen in more and more industries because there isn't one. Now, what is good is if you start in an industry where at least part of the playbook, or at least you have something. So the good thing in something like pharma is there is a market that trades IP and it's always paid for IP. So at least you can rely a little bit on that so you don't have to reinvent everything. In others, like in materials, that's very hard because that people don't pay that much for IP. So there's easier places to start, but you have to build it often, and that's the challenge, and that's not what all investors want to do, to be honest.
And I think for investors also, right? I think
it's a huge challenge for investors.
Exactly,
yes.
And to kind of recalibrate your own thinking, especially industrial tech, for example, takes sometimes longer to go to market, right? And then they're looking at the revenue and they're like, oh, a lot of that is not ARR, but actual service revenue, and that is actually quite normal for that sector. So I think this may be something that investors need to, adjust to also in their pattern recognition. Yeah.
So one other thing that is a question that comes up a lot these days is, and it was alluded to in the introduction, the question of how do these companies impact the world, and how much do you pay attention to whether a company has a mission that you sort of feel is like a good thing, for whatever definition of good thing, and also do you believe that mission-driven companies could be more or less likely to be breakout companies, big breakout companies? And there's some debate over a company like Airbnb whether it truly is as mission-driven as it sort of portrays itself. So I'm curious how each of you sort of think about the question of mission as it intersects with the idea of finding breakout companies.
I think this is definitely shifting, at least for the 7 years that I've been investing in Europe, towards the positive. I think, first of all, if you're a founder with an idea, what you need is people. And I think younger generations coming into the workforce full of talent, people actually care about mission, and they might care about impact, and they might care about sustainability. And so I think because talent cares, then I think companies will care as well. Some might be born with mission, values, and principles, and some might come after, but I think that's important for the talent base. I think also separately and importantly to this, LPs, which are an important force as your customers as a VC, they increasingly care about environmental, social, government, ESG policies, and I think that is also, making a positive shift in the market. I think as a venture investor, it's always hard to know what your impact is, and actually Softbank is trying to quantify that on its portfolio. It's a difficult thing. I think it's a new way that people are thinking and trying to quantify, but I think I see a lot of shift towards mission-driven being part of the criteria in evaluating an investment.
Yeah, I think our view is that in the long term, profit and purpose will increasingly coexist for some of these drivers, talent and LPs. And I think if you think about the new founders that are coming into the market, we definitely see them being more mission-driven. I think the question is then, if we believe that they're a force for change, and if we believe we can help them scale, are we even responsible, not just kind of a nice to have, but is it more of an imperative for the VC industry to actually start proactively, differentially supporting those founders? And then you kind of have the other side of the equation. You have the fiduciary responsibility to return capital to your investors, and kind of marrying the two will take a long-term exercise around how do you actually measure what is impact, and more than just carbon emissions, at a broader scale, and how do you make those decisions when it comes to an investment decision? Do you actually include that alongside your returns with an equal weight? I think we're not there yet, but it's a question whether we do have a responsibility to do that in the long term.
So this is a really interesting idea, right? The idea that if one of the things that venture capital can do is to really help companies break out, and if there are important missions, maybe VCs ought to allocate more money to that. Are there specific types of mission you have in mind for that?
Things like sustainability. Obviously, I think, investing in infrastructure, energy, and we were talking a little bit about this earlier. I think these are all things that everyone should care about, and we should all be spending our time to understand where those technologies are, because, for instance, the Softbank mission is to invest in technologies that can affect the way people live, right? If we think that the climate crisis is really going to affect people live, then we should be trying to stop that, right? And so I certainly hope that that's the way that more VCs will start investing, and that will start attracting more and more founders also into that area.
I think what's interesting about the green tech aspect you were mentioning now is that for the first time ever in capitalism, I think we are actually confronted with a disruption that is not human-made. But it is human-made, but very indirectly, and we have to respond to that. And I think just considering a lack of, I think you can almost describe it as a lack of foresight, that there hasn't been more money invested into the sector previously, right? It just seems to have been largely ignored. But I also like to kind of recalibrate the term or definition of mission-driven. I think mission-driven doesn't necessarily have to be, environmental or sustainability related, but it could also be just, I think for me, a mission of a founder could be just something that is a reality distortion field almost, right? Like the founders, similar to artists, they just see a different reality. They have a different framework of reality, and they want to make that true. They want to make that tangible for other people. And I think that can be a mission, right? And I think a lot of these large companies, looking at Facebook, right, he's still relentlessly building for his mission, which is connecting people, right? Which I think has created definitely a breakout, but it's also something that has led to, a new ecosystem that other companies can build on top of. So I think that's also, a different framework of mission-driven that I'm excited by.
Thank you so much, everyone. I hope you all enjoyed this. Big round of applause for the panel here.